Joining me now is Rob McEwen, Chairman and CEO of McEwen Mining. Great to see you again.
It's great to be here. Thank you.
So let's hear about this $155 million investment from Stellantis, the auto company, into McEwen Copper. First OEM, I believe, to do such a deal. When did you get the realization that this shortage in critical minerals was serious and critical, and that you wanted to pick up the phone and start calling these auto companies to strike an arrangement like this?
Last year, we put some money. I put $40 million into McEwen Copper to get the game rolling back in the summer of 21. We were moving along. We're saying we need other financing, and you just saw all these projections for climate change. You went, they're going to need a lot of metal and a lot of copper. When you started just doing some simple math about electric vehicles use a lot more copper, and there's millions of electric vehicles going to be coming out in the very short term. So I asked Michael Netting, our VP and General Manager of McEwen Mining, to think about approaching these auto companies. And he said, okay, off he went. And Stellantis produces about 160,000 vehicles in Argentina annually. They have to bring copper in. No, there is no copper producer in Argentina that's producing cathode copper. So you have to import all of your copper. And importation is sometimes slow and difficult. So we're going to be producing a cathode copper. We're also looking at designing a mine of the future that's very, using less water, emitting less carbon, dust, noise, and taking a very different approach to how we want to develop Los Azules. We're calling it the mine of the future. And that resonated very well with them, because they're looking and saying, we want no carbon by 2038. And treating the environment much more respectfully. And they just went, oh, we got to talk. And then they sent in a large team of people to do due diligence. And then they said, well, how much can we buy? And we said, well, you can only buy up to 15%. We're not going to sell any more than that. Well, we want more. Well, that's all we're offering. But we'll give you the option to take more if there's another finance. So they came in, and they also had pesos in Argentina that were harder to get out, and we're spending the money in Argentina. So they looked at it and said, the government wants to see more jobs, more investment by companies there, and that just hit the mark several times. So they were there.
Now, with Los Azules, you've said that the market isn't fully understanding it or valuing it compared to in Argentina, compared to some rivals such as Filo, Jose Maria. So what's unique about it?
Well, there are a number of aspects that make it very different than Filo and Jose Maria. I use those two as a reference point because they're in the same province in Argentina. They're copper. Jose Maria sold to Lundin for $485 million in 2021. Filo's trading at $2 billion, but all right, so what's the difference? First of all, we're lower than they are. We're at 3,100 to 3,600 meters. They're at 4,200 and up, and the top end of Filo is Base Camp Everest equivalency. So that's a very difficult place for machines and people to work at that altitude. We're closer to the power grid and the highways than either of them. Our resource is larger than either of theirs, and our copper grade is higher. So you look at those aspects and say, well, what's our valuation? Based on Rio Tinto coming in and Stellantis, that lifted the implied value of Los Azules to about $550 million. So that's at the bottom. Jose Maria's 485, but Filo is $2 billion. So given the attributes I just mentioned that seem to be better than those two, I feel we have a good chance of getting closer to the $2 billion than the 550 that we're currently at.
I'm sure you're keen to unlock this value, but you don't want to rush it, obviously. So you're heading towards an updated PEA for McEwen Copper, and then an IPO at some point, 24 maybe?
24.
Yeah?
Yeah.
Okay. So that's the plan.
We'll be preparing for that before then, but yes.
Now, so you've said that McEwen Copper makes up, let's call it 55% or so of the value of McEwen Mining. Is that right, around there?
Probably more. Well,
than that?
currently.
Okay.
Yes. I think there's a value between, when I look at McEwen Copper, I look at our precious metals, I look at the royalty portfolio we have, and I just go, I've done some calculations, and where our precious metals are trading relative to our peers, we're at a substantial discount. So an $8 to $31 a share value, US.
Okay. So McEwen Mining shares the last 6 months are up roughly 120%, but that is after what you called a painful decline and a rapid evaporation in goodwill in the market, which you said you hadn't really seen before. And we don't necessarily need to go into that, but are you back on track? I know you missed an earnings season quarter, but are you back on track? And are the shares where they should be, or are you like most CEOs who say we're undervalued?
Oh yeah, we got to go a lot higher. I think we've bottomed out from September 1 last year to last Friday. We were up 200%.
Oh, that much? Okay.
The GDX and the GDXJ during that same period, we were 4 times better than they performed. We were 12 times better than the price of gold and 15 times better than the price of copper. So we've seen our gold operations starting to improve. The Fox operation in Timmins came in producing slightly more than we said it was going to produce, and it came in below our cost numbers. Our gold bar in Nevada came in on the cost numbers, but fell quite a bit short of what it was supposed to produce. And then our San Jose joint venture with Hochschild Mining, the first quarter is always a weak quarter for them, and it stayed true to the course. But everything else, Los Azules, we attracted $193 million since August of 22.
And full disclosure, I own a tiny bit of McEwen Mining.
You do? Welcome as a shareholder.
Yeah. I watched it for years. I don't know why I've never bought it. I've had great respect for you for a long time. But we have to keep this serious and journalistic, and I'm not
conflict of interest.
No, not at all. I just wanted to disclose that. So let's talk more broadly about gold, because there's so many factors, so many tailwinds it seems right now. We don't need to list them. Most of them are very obvious, not to the least of which is the debt ceiling, what may happen there, and so on. But in your career, is this maybe the best setup you've ever seen? It feels comfortable around 2000.
Well, there's certainly a lot more debt in the world, and the monetary expansion has been out of this world, just enormous. So yes, the setting is very good for gold to start to run. You're seeing central banks buying that you haven't seen for quite a while. People are getting concerned about the value of the US dollar when you have Russia, China, India, Brazil, all trying to come up with another currency backed by gold. It's small right now, but as it used to say on the American dollar, we trust in gold, not just trust in God. I think we're coming back to that again, where the fiat currencies, people are getting fed up with the way governments around the world are abusing their currencies and inflation rates.
So the last time we talked, I'm going to say it was maybe 10 years ago. I was at BNN at the time, and I remember you saying gold's going to go to 5,000. You still think it's going to get there, maybe in the next 3 years. What would be sort of the main confluence of factors that would get it there?
Inflation is doing that. A lot of people look at interest rates and say, well, as rates go up, gold goes down. But if you look at the late 70s, gold was running when interest rates peaked out at 22%. There's still quite a bit of room in there. It's going to be a realization that your dollar's not buying as much as it used to. And how do you protect it? I think you look at some of the bank failures that are coming along and saying, well, what did the Swiss just do? They just wiped out their bondholders. And you go, No, that's not supposed to work that way. If there's a bankruptcy or a liquidation, the bondholders get their money first, and then if there's anything left over, the common equity shareholders get something. But here, they just took out the bondholders and said, you look at that, you look at the Canadian government and the Freedom Convoy, and reaching into bank accounts and taking money out. You go, banks aren't supposed to do that. But the government is playing a bigger and bigger nasty role out there, redefining the rules to suit their purposes, not our purposes. And when the distrust starts rising to a level, there'll be a flashpoint. I mean, when we go through $2,500, $3,000 isn't too far away, and then you start looking at that momentum, and more eyes are focused on price movement, and you'll have some runs.
So potentially, gradually, then suddenly, as it goes mainstream and starts hitting the headlines, and generalists come into the market, retail investors.
Yes.
Yeah. All right, we'll be watching. Thank you very much, sir. Great to talk to you.
You're welcome.
I really enjoyed that.
Thank you, Mark.
All right, Rob McEwen, Chairman, CEO at McEwen Mining.